Welcome back to Force Education. This is Ed. Today we're going to be talking about SoFi. Now, SoFi Technologies has been taking a massive beating where the stock price was up to around $25 and currently trading around $6.12. So there's been a massive drop around 75% from its highest point, and currently it's almost at a new low. Now, this company has an income value of around $500 million in loss apparently, and a market cap of around $5 billion. Or 5.34 billion. Now, they had some recent news for this company, and they still are going on with reporting their earnings coming up soon. So it is really dropping down with the market itself being a little bit beaten up lately with tech companies in general, and this company is still somewhat under the tech umbrella. Now, even though their products are more relating towards fintech with loans, investing, banking, insurance, credit cards, and other financial benefits and products, it still trades itself or markets itself as a tech company, and fintechs and techs in general have been taking a bit of a beating. Now, SoFi here, just to give you a bit of corporate overview, they mentioned that they are trying to get financial independence for people. With financial independence doesn't just mean being richer, but to the point where your money works for you when everywhere you live or wherever you live in general. Everything you do is towards helping our members getting their money right. So that's a little bit of their own perspective. They were founded back in 2011. Now, we did go before through the presentation. I'll highlight a couple of things later on, but we're going to try to take a look into what matters. Now, by the way, back in 18th of April, they mentioned while inflation rises, they try to get more money into the pockets of their basically customers with a 3% credit card cashback. So their new direct deposits will earn up to 3% cashback on SoFi credit card purchases if they maintain a qualifying direct deposit every month. The 3% rate will be applicable to 36,000 points or equivalent to $12,000 in spending or on SoFi credit card for 1 year. So meanwhile, it's not a lot. It's still $12,000, and depending on what your spending is, that could be actually quite nice. And they're also offering different welcoming bonus, like $300, for instance, for new member signups. So it's basically the customary from what you see with different credit card offers. And the reason why I'm saying that is a lot of them give a bonus, and some of them give a hiked up cashback percentage for up to a limit of money. If you're like someone like me, where $12,000 won't really do for a year, well, I mean, there's a lot of different bills right now with inflation. $12,000 is a little bit limited, but it's still something, and it will probably bring more customers in. Now, from a net income perspective, this is something that is very interesting that I found from the annual perspective. You're able to see that it's actually doing worse in 2021 compared to 2020, 2019, and 2018. And this is back down to around negative 484,000, and this number is reported in 1,000 compared to negative 224,000. I was again reported in 1,000, so we're talking about millions here actually. But I just wanted to give you a bit of comparison. And in terms of quarterly, what you get to see is that the last quarter wasn't so good at the end of the year, but back in September ending, it was a bit better, negative 30 million loss, and back in the half year, it was around negative 165 million. But from when you go towards the presentation itself, you get to see something that is a little bit different. And this is based on the quarterly adjusted net revenue. So the adjusted net revenue is better. Now, they say here, see footnotes sections for details and explanation for definitions and how these things were calculated. But if you go on and consider quarterly adjusted net revenue, it's actually looking better than net revenue, where they're basically recording in records every time. Quarterly adjusted EBITDA isn't the best per se, but overall the quarterly adjusted net revenue seems to be still going on and increasing in terms of growth. And you're able to see that for lending products and financial products and Galileo accounts and just members in general. This company has been in a growth trajectory. Now, currently here, you're able to see an annual adjusted net revenue for 2021, where it was around $1 billion, and adjusted annual EBITDA was around $30 million as the first positive one in 2021. The question is, are they going to be able to actually see that coming up for 2022? For quarter one 2022 guidance, they had different numbers. So adjusted net revenue was between 280 and 285 million. Now, illustrative guidance, if momentum had expired on January 31st, 2022, would be 310 to 320, but let's keep on to 2080 and 2085 million. Now, how does that compare to what you've seen in the last quarter, where the last quarter was around 272 to 282, and the actual was 280 million. So they're basically within reach of this goal, and they could easily as well break it. Now, the adjusted EBI TDA is between $0 and $5 million, and from what you see here, back in quarter 4, they hit 5 million. So they're giving the upper range as their upper range for quarter 1, 2022. So there is a lot going on here. Their net revenue is different than their adjusted net revenue, but from the adjusted net revenue, they're doing really well, and their guidance can easily see a bigger push for the stock. Now, the question is this already baked into the market? Well, with a market that has been going sideways and really doing some tests, you have to first take a look into price over book and price over sales. So the price over sales here is 5.15. It is a bit overvalued than the market average, but the price over book is actually undervalued compared to the market average. So it's kind of in a weird spot where it's neither overvalued or undervalued. It depends on the metric you're actually taking a look at. Profitability, it's still negative, and that is the thing that is plaguing this stock and making things a bit of an issue for them in terms of really pushing in price upwards. Now, the big thing is that their quarter 1 2022 results will be on Tuesday, not this coming one, the one after, on May 10th, 2022 at 5 p.m. Eastern Standard Time. And this will give you a bit of an insight on how the company is doing, moving as well forward. Now, press releases, we do have a bunch of different press releases back in April and March, but we're just going to move on from that. And for institutional buyers, we see SoftBank still holding around 95 million shares. Vanguard Group back in February declared 54 million shares. The rest are basically holding for the major institutions. Institutional buyers appear to be a bit more bullish than bearish, but things are still looking good. Now, before moving on towards technical analysis, if you would like to see more contents like this, make sure to click the subscribe button and leave notification buttons on for this channel. Don't forget to drop a like, and let's move on towards technical analysis. Now, from a technical analysis, we see a lot of things that are happening for SoFi. Now, the moving averages have been bearish for the longest time. The last time it's been bullish was back in November of last year. So there's a lot that has happened since then. This stock is still trading under a bearish kind of umbrella. The stock is below the 50 SMA at 890, and the 200 SMA at 1436, 30 EMA is above the 10 SMA, and we're doing all these metrics on the one-day perspective. The average directional index is sitting at 2636, so it's suggesting that there could be a reversal at some near future. Boolean percent R is very similar to the RSI index, and it shows a highly oversold stock. The MACD is attempting a positive reversal sometime this week, and that looks somewhat to be bullish. Momentum is actually still negative, but clinching up closer towards 0. The stochastic fast and stochastic slow are on the bottom, suggesting this could be a good time to buy based on the previous stock averages, but again, it's because it's around the 52-week low, around 602, right now it's 612. Now, the moving average bands you're able to see here have been dropping for the most off, let's say, 2022 and a bit off 2021. Now, the stock itself is expecting to trade on the moving averages between 820, 745, and 671, but this stock moving averages is still going downwards, suggesting a continuation in that price movement. Now, from a Fibonacci retracements, we're able to see a resistance at 1049, 1325, 1549, 1772, 2090, and 2495, with a support being at 602. Now, from a price line action, we're able to see a support coming around 612, 610, another one at 602. Resistances, 654. You're seeing a very hard one at $7. Above there, 771. 890 going up to 1003, going higher to around 1098, 1218, 1310, 1395, 1441, and higher to 1530. Comes to the question, Ed, what do you think is going to happen here? Now, if you're going on and drawing some channels here, you're able to see that the stock has been going downwards for the longest time. I wouldn't say ever, but it's currently on a downward trend. In order for it to break that downward trend, it needs to really hit above $10, which is almost basically saying for the stock, in order to stop being bearish, it needs to hit 100%, which is somewhat true, but it's a little bit of a far off fetch to have that overnight kind of situation. Now, this stock has jumped before from something like $14 to around 24, and the lowest it was from 13 to 24, so around $10 difference, which is almost what we're looking for in terms of percentage basis. But this stock has taken a massive beating. Now, the only saving grace I think that this one will come for is back on or ahead of the 10th of May when they report their first quarter 2022 results, and you might actually see a massive push for this one. Now, what do you think about this ticker? Make sure to mention down in the comments below. Sure, subscribe and like, and have a wonderful day.